Private house approvals refer to the number of building permits or approvals granted specifically for the construction of private residential houses, as opposed to commercial or public buildings. These approvals are granted by local government authorities or zoning boards before construction can begin. Tracking private house approvals is a crucial indicator of the health of the residential construction market and can also signal broader economic trends in the housing sector. Private house approvals specifically focus on single-family homes or private residential dwellings. This type of approval does not include multifamily units, apartment complexes, or commercial properties. The approval process typically involves submitting plans, inspections, and assessments by local authorities to ensure the house complies with building codes, zoning regulations, and safety standards. These approvals are usually recorded on a monthly or quarterly basis. A private house approval refers to the granting of permission to build a new home or an extension of an existing private residential property. The total number of approvals over a period of time helps assess the health of the housing market and the construction sector. An increase in private house approvals generally indicates strong demand for housing. If developers are receiving more approvals, it suggests that there is a growing need for new residential properties in the market, often driven by factors like population growth, migration, or low mortgage rates. Private house approvals are a direct indicator of activity within the residential construction industry. A rise in approvals can signal confidence in the housing market and construction industry. A decline, however, could signal a slowdown in new residential projects, possibly due to reduced demand or economic uncertainty. The number of private house approvals can be a leading indicator of broader economic conditions. For example, if private house approvals are increasing, it could suggest future economic growth as new homes mean more jobs in construction, materials, and other related sectors. Conversely, a decline in approvals might suggest weaker economic conditions, lower consumer confidence, or tight lending conditions. These approvals are closely tied to trends in the real estate market, including housing prices, rental markets, and supply and demand. More approvals might help alleviate housing shortages in certain areas, potentially stabilizing or lowering home prices. Governments often track private house approvals as a way to monitor the housing supply. Housing policies, such as tax incentives for first-time homebuyers or interest rate cuts, may encourage more approvals for private homes. Conversely, stricter zoning laws or higher property taxes may reduce the number of approvals granted. For example, in a housing boom, government policies may encourage private developers to get more permits to meet growing demand. In a housing downturn, governments might implement policies to stimulate more approvals, such as reducing taxes or easing building regulations. Examining the monthly change in private house approvals helps track short-term trends. A month-over-month increase in approvals can indicate rising demand or a seasonal uptick in construction activity. This comparison helps capture broader trends and smooths out any short-term fluctuations. A year-over-year increase in private house approvals suggests long-term growth in the housing market, while a decrease could indicate a slowdown in residential construction. If private house approvals rise by 10% over a few months, it could indicate strong demand for housing in the area, which may be driven by favorable economic conditions, increasing population, or favorable interest rates. A decline in approvals over several months might signal a cooling housing market, potential overbuilding, or a shift in market sentiment, such as rising mortgage rates or reduced buyer confidence. Lower interest rates can encourage people to purchase new homes, increasing private house approvals. Higher interest rates may have the opposite effect, reducing demand for new housing. A growing economy typically sees more private house approvals, as people have more disposable income and confidence in long-term stability. In contrast, during an economic downturn, approvals might drop as people hold off on major investments like home building. Policies designed to stimulate the housing market, such as first-time homebuyer grants, tax rebates, or favorable financing options, can increase private house approvals. Policies restricting development might reduce the number of approvals. An increase in population typically leads to more demand for housing, which translates into more private house approvals. The number of approvals may not directly reflect the actual pace of construction. Sometimes construction delays or other factors may mean that houses approved are not built in the expected timeframe. Private house approvals can vary significantly across regions. A national rise in approvals might be driven by a few key areas with booming real estate markets, which may not reflect conditions in other parts of the country. Month-over-month or even quarterly data may not capture long-term trends and might be influenced by seasonal factors. Year-over-year data can be more insightful for understanding broader market trends. Private house approvals are a key metric in understanding the health of the residential construction market and housing demand. They can indicate trends in housing supply, the strength of the construction sector, and potential shifts in the real estate market. Policymakers, developers, and economists use these data points to assess market conditions and predict future demand for housing.